Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So we've still got a bull market trying here, but it would appear to me that we've lost our way. I'm recording this Tuesday night before the CPI data, but the charts look pretty tepid is probably the best way to describe it. So tepid or woozy at best is kind of the title for this week's show. And what I want to cover off is the issues that we've got going on here technically, and how none of them have started to turn yet, which is really probably the factor that's most important. Even after making our low almost a month ago, June 17th, we still have not been able to break above the 50-day moving average, and we've spent about a week trying to do that on the Nasdaq. So that's a concern. Commodities are clearly broken, and oil was down hard again today. So all of these things are adding up to just kind of put into context what's going on around us. And, I keep trying to be optimistic about a turn, but really the rally over the last 3 weeks hasn't been able to push the market up much. And if anything, we have a lower slope on this rally. So we'll cover all of that off. Big thing, we've started to see Bitcoin and Ethereum behave like their risk on, risk off sentiment indicators. And to me, it looks like they just have bear flags on them. And so we're going to cover off what that means. But I thought what I would do today is, rather than focus on one industry, just kind of go through a group of charts. And I did post an article on StockCharts about reviewing the Nasdaq. We'll cover off a few of those charts, but for a bigger description of all of those charts, you can head on over there. And hopefully you'll find something you'd like. If you'd like to follow our work a little bit closer, you can head over to ospreystrategic.org. There's a few membership offers on the homepage. Check those out. But I think the one thing I'm trying to do is keep people on the right side of the trade and understand when momentum is improving and when it's starting to wane. And then the goal obviously is to help you that as we hit the bottom, we're going to be able to try and rally out of the hole. Okay. So let's cover this off. First of all, so here's the Nasdaq. This is going back to the market top, close enough to it. The Nasdaq topped in November, but the December 27th high was almost the same. What we see here is we've got this big downtrend that started at the end of March, call it March 28th or 29th. We've been falling hard. On the options expiration Friday, we had a big volume day, but that was kind of the day that we looked to see if we could break out. And so from that moment there, we've been rallying for, again, we're going on our fourth week here, but at the end of the third week, we had just made it up to where we made it in the first week. And so not a lot of progress going. And if you just look back, okay, this was a really steep rally. This was steep and short. This was at best sluggish and looks to me like it wants to fail. So that's a bigger problem. Looking at maybe just to give you a goal here, I have a whole bunch of charts, and they're a chart list that I keep for clients that are interesting at this point in time. So we're going to go through these charts, not necessarily in order. I just want to focus on the indexes first, and then we'll go back and review some of the other ones in here. But the key message I want to share is when we look across these charts, we're not seeing anything compelling to get us out of the problem we're in. So the Nasdaq has both the on-balance volume continuing to decline, the accumulation distribution is continuing to decline, and we're not seeing any sort of uptick. Even this week, last week we closed at, I'll call it near prior highs. But the issue is these are all what we would call bear flags. So you're in a downtrend, the market pauses and tries to rally, fails, and then breaks down again. So this was a bear flag, fell down, bear flag, fell down. And it's really obvious on the Bitcoin charts. We'll cover that off. But essentially, these indicators are not turning yet. And one of the reasons I offered a little bit of hope towards the rally starting in June was we were starting to see the Nasdaq stop underperforming the S&P 500 and perform in line. And so it's been doing that for about 2 months, but really not very well. Got another chart of the Nasdaq in here, and this is the Nasdaq really short term. It's a 60-minute chart, and the idea behind looking closely is as the market tries to turn, what we want to watch for is momentum changes, something that really kind of is compelling to tell us what's going on. And normally our momentum indicator, our PPO down here at the bottom, should help us find new lows. And you can see that we had an extreme low in price right after we had an extreme low on the PPO going back for this whole rally or this whole bear market. We made a higher low. We've now made a higher low to start the month of July, and now we're sitting on that trend line after a couple of days. I like a couple of things on this chart, and two of them are not making me very happy right now. I have a small Keltner band ran through the middle of this. Essentially, when we're above, it's supportive. When we're below, it's not. You can just see it was pretty much friction all the way down here. Was support till it wasn't, fell down, got above it, fell down, got above it, and now we fell down again. So we're closing back below the Keltner band, which I don't think is very good. And we're also below this black line, and the black line is just the 100-period moving average, roughly the 20-day moving average. It moves way faster than that, so I just want to make it clear it's very approximate around the 1-month moving average on a daily chart. But the bigger issue for me is the chart has tried to rally here and just didn't have anywhere near the momentum it had here or here, and it just looks lackadaisical here. I get the feeling we're going to break lower, and that's what I'm a little bit worried about. The CPI data tomorrow, and following that, next week we have a Fed meeting. We also have options expiration on Friday. So there's a host of things that can mark major inflection points for the market, but this was options expiration Friday in June, and we managed to hold above it. Now we've got the opposite direction going here. Really need to make sure that the market has some structural strength going into this, or it could fall meaningfully. This US dollar chart is still on July 11th, and if we just go to UUP, we were basically sideways on Tuesday, so no real action there. But the dollar is one of the big problems here. The dollar is taking off to the upside, and obviously that means some of the other currencies in the world are dropping. But one of the big ones is the euro, and we traded around parity with the euro. And the idea being, see how it says 1.0 here? So that's parity. But you can see that the euro's been underperforming for a while, not just when the invasion of the Ukraine happened. That basically accelerated it lower. But we continue to have this period where the Eurozone has debt problems, energy problems, and now you're starting to have the consumer go into a recession and starting to protect capital. So all of these things are adding up to create a weak euro. And then when we go to the yen, we have the same problem. So the yen continues to tread lower. So these are two big currencies that are both struggling against the US dollar. And you can see the yen really started to accelerate lower after the invasion. Japan just happens to be located between Russia and China. So that's a bit of a hot place to be from right now. And if we go look at the British pound, it's doing the same thing. If we go look at the Canadian dollar, you can see it's been a little stronger, but still choppy at best and working its way lower. So we don't have support in any of the other kind of major trade currencies. And this is causing part of the problem is that we've got big pressure on U.S. corporate earnings, because if the S&P 500 sells a lot of stuff abroad and that price is sold in euros, as an example, but the euro is dropping, well, What that means is in US dollars, the companies will receive less revenue. And so with that less revenue, now all of a sudden their earnings are starting to be impaired. So all of the global revenues, as you can see based on these charts, in all the economies are starting to roll down just on a currency basis. And then if you add in any sort of economic slowdown or consumers reeling in spending or anything like that, well, that's going to also impact these companies. We're just starting to see that getting priced into the market now as we head into the second quarter of earnings. So these are all things that are making it much more difficult. So hopefully I've explained the currency effect on the indexes. When we have that problem, what we need to be focused on is, what is the risk appetite and what is causing it to change. I do want to show Bitcoin as an example of a market that is continually bear flagging, and it's been a bit of a risk on, risk off indicator. For me, when you came down here and you made what we would call a bear flag, in here you got this position where the market tries to figure out which way it's going to go, and then we've had one recently and tried to figure out which way the market wants to go, and to me it looks like we're ready to break down out of that again. Those issues, that's an example of risk off happening, and now the real question is, do we have a severe break lower like we did the last time the Fed met, or will it be a more controlled response? I'm of the camp that this isn't done yet, and so we'll probably see this Bitcoin back below 20,000. We might just see it make another leg lower. And none of my momentum indicators are starting to get near where I'd be more interested. So what I'd like to see, typically, I'd like to see the momentum indicator kind of breaking out from a downsloping trend. And we don't really have that yet. We're still a long way away, and so maybe if it started to ride up here, that would be a more interesting place for me. But we just haven't got that. Now, it could get there either by the market going sideways, or it could get there by the market actually turning back higher. So far, neither one is happening. On the daily chart for Bitcoin, again, really, the big lows we made on June 17th haven't really been tested, but again, we haven't made much progress either. We've tried to come out of here, and we've just chopped around in kind of the prior trading range. When we see this price action where it really can't get much upside momentum, that's a problem. But notice on my daily chart, my momentum trend line continues to be a hurdle and hasn't really got there. So if we could just dip down here and then head out nicely, quickly, that would be a little more positive and at least tell us that perhaps risk on is starting to happen. Without that, it gets more difficult to believe this is going anywhere. So let's go look at Ethereum. And I have this on a daily chart, and you could just see straight downtrend. We got to the trend line and we're starting to fail. Here, at least, we've started to break the momentum trend. But again, we're rolling back over. So if we're just going to stay under the zero level here, that's a big problem. That really implies that we have negative momentum and we can have rallies within the downtrend. But until that starts to convert to an uptrend, that would be something bigger that we'd be looking for. When I go look at the S&P 500, and there's a couple of things I want to show here. This is just the S&P 500 from June the 9th to July the 12th. And we started this rally back here around options expiration. Good push, pullback. Second push wasn't very strong. And now we've broken this uptrend. Now we're magnified here. We're focusing very heavily on this simple upsloping trend line. Now, with CPI coming out tomorrow, when this actually breaks now, maybe we find support in here and we can bounce out of here. But the market structure so far is very weak. There's no real aggressiveness going on, and we did have light volume days starting to show up. And what does a light volume day mean? Well, it just means that there's no buyers interested either. So these are concerns I've been having, and what I was hoping is as we got up here, we'd be able to kind of push and get going. We haven't been able to do that. When we look in on a different chart, here's the year-to-date chart. This is a pretty big downtrend, and again, I've set this chart. Actually, let's just go change it to December 31st. Close enough. And the idea being, where are we relative to the end of 2020? Now, the Nasdaq is about 7.5% below where we started 2021. S&P 500 has been a little stronger, but to me, again, this is another example. I showed you on the Nasdaq kind of the strength of the rally. So this was a pretty good push in March, a more subtle push in May, and now a very subtle push in June. So to me, it doesn't look like the market really wants to step up and buy yet. And that's a big problem for us. So these charts look broken, and it looks like it could make another leg lower. Now, if we widen out the chart just briefly, here's our COVID lows. So we could still drop down to, let's say, in this level here. Okay, how do we pick this horizontal line? Basically, we're just going off the 2020 pre-COVID high, but we could also just, move it around here. What makes sense? So let's just say if we wanted to include these lows, we're kind of got a best fit line through here. So this is kind of the area of, quote, support or potential support where the market might be able to come back into and give us a little bit of strength there. But the problem is that's another 15% lower than we are, or roughly. I'm just, because the scale is from 0 up, it's not a percentage down. But just to say as an example, if we came down to the pre-COVID low, that would be, or the pre-COVID high, that would be one area for the market. Now, if we go look at the New York Composite, we're already at this level. So the overall market is already sitting there for the bigger New York Stock Exchange, all the stocks on there. And if we go to the Nasdaq, we're still a little bit above it. Let's say roughly around the 15% level. We've still got another 10 or 15% that this could drop to get us down to those pre-COVID levels. Now, am I suggesting that? Well, I sure don't want to suggest that, but it does look to me like the market isn't strong enough to hold a rally here, even after a 3-week attempt. When I look through some of the different areas, I want to make sure the financials are holding up. And the problem for me is that, this chart's just gently breaking down. It's not collapsing by any stretch. It's literally just stepping lower. And this is the European financials. Now, they're trying to hold this February-March low period in here. That was a new 52-week low for the group of stocks. If this all of a sudden starts to snap lower meaningfully, we'd have big problems. That's what we really don't want to see. When we're looking at the bank index itself for the US, this is a bank ETF. We're marginally at 52-week lows, but we've been holding here for 5 weeks. No real stress. The market's down more than this so far on Tuesday night, and yet this is holding in pretty good. So either the banks are starting to anticipate something better coming from the Fed, but they're not really giving up these. They're not falling as hard as the overall market is. When I look in on semiconductors, this chart's clearly in a downtrend, and there's a perspective where, perhaps this could start to go higher. Well, one of the problems, I have another chart saved somewhere else, but I'll just recreate it here. Dollar util colon SMH might work better. Okay. And what I want to show here, I'm just going to make it a line chart. And the idea being semiconductors were outperforming the utilities. So the utilities compared to the semis were dropping. Well, look what's happened now. The semiconductors are underperforming utilities, i.e. the utilities, which is first here. Utilities are outperforming semiconductors, and probably until that trend changes, that's a pretty good clue for us to just be aware of. So we need to start to see something like that happen. Now, that's one example of a different way to look at this market. my main point on here is we're just not getting other charts that are starting to help us get out of the rut the market's currently in. So until that starts to change, that's going to be a bigger detail. When we go look at the software area, and you could use IGV, the ETF for that, or you could just look in here. But what you see was the Nasdaq, or the software stocks, were declining. They made this low in mid-June, tried to rally for 3 or 4 weeks, a bunch of inside bars, no real price action gained over the previous month of May. We struggled and stayed below the May high. But now it looks like we're starting to break out of this little uptrend we had going. The real question is, can we start to hold in here, or does it break down? And the good news is the PPO looks like it wants to try, and it's broken its downtrend. It wants to try and cross above its signal line. But the problem we're having is that, the market's down a couple of percent, but this is already down 5.5% this week. So it doesn't really look like technology is going to be the area the market wants to rotate into. The next area of concern, I think this next chart might show it a little better. This is the XOP, the exploration and production stocks. And I mentioned that the ETF, or that the commodities were under pressure. Well, this has been the lone holdout, still in a big uptrend, was the oil stocks. And they broke their 200-day moving average, and now they're just hovering in here. And the real question is, can the momentum bounce around zero and start to turn back higher? There's definitely a shortage of oil, but the market is pricing in the fact that demand will contract so much that this chart will continue to go lower. And that's a real big hurdle for us. So when we look at oil itself, this chart had an uptrend. It's pretty much broken. We're trying to hold the 40-week moving average, and our PPO momentum trend is already broken. So if all of these things are starting to slip, it's kind of like the last holdout is giving in. And what we wanted to see was a rotation into tech and growth oriented stocks, and we were seeing a little bit of that during this rally, but quite frankly just not enough, and we saw things like the software group falling down. So this makes it very tricky for us to kind of analyze or to invest in the market, because we're not really finding a lot of areas of strength. And if I look at gold itself, this chart is clearly breaking down now after what we would call a bear flag. It sat here with 3 weeks of indecision, so outside bars, higher highs and lower lows each week, and then all of a sudden it literally just cracked. So we're not seeing the price action in gold that's helpful. And when we look at the gold miners, this chart's just been straight south since late April, and nothing really to help hold it together. Was 42, now 26. That's a pretty meaningful pullback. And when we go to copper, often called Dr. Copper, around the end of March, so when that last high was for the S&P and the Nasdaq, this topped out at 46. It's now 27. Half would be 23. So this thing is well on its way. This is copper miners, and literally inside 3 months, we've given up 50%. So this has been a real gut-wrenching change for all of these commodity areas that were so strong. And we don't see, the problem is we haven't got anything kind of pointing to better days ahead. And that, to me, is a real big issue. Looking at oil compared to the SPY, or oil compared to the Qs, this uptrend has been broken now for the first time since the beginning. So it was one reason that I was hopeful that perhaps not only was oil leveling off, but we might actually see the commodity make the changes for us, or the indexes start to make the changes where it could actually go higher, and that would be a little bit bullish. We haven't seen that at all. So we're not seeing the Nasdaq really kind of turning up enough to help us understand or to see big changes. So what does that mean? When I look at it all, I think the thing I don't like the most is the if you just go to, actually I'll do QQQ, and if you go to the P&F chart for QQQ and just click on this, if we just ask for a price objective, doesn't matter breakout or a reversal, but the price objective is 229. That's a long way down, and it gets us very close to where the market was at the pre-COVID high. So right now I'm shooting for that to be somewhat of a target. With that, thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, have a good week, and stay cautious here. It looks a little rocky.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.